So now, without further delay, let's begin today's event, sponsored by Axway and hosted by American Banker. It's my pleasure to introduce your moderator for today, and that is Michael Sisk. Mike, you have the floor.
Thanks very much, Greg. I would like to welcome the audience once again. We are grateful that you've chosen to share some of your day with us. We know your time is valuable, and we'll honor that with what I'm confident will be an enlightening 60 minutes or so of discussion. Once again, our topic today is Banking of the Future, how financial institutions must use digital capabilities to remain competitive. And my name is Michael Sisk. I will be your moderator today. I've been a New York-based journalist for about 15 years. I've had stints as investor editor at Red Herring and editor-at-large at American Banker. My articles have also appeared in Barron's, Crane's New York Business, Inc., Institutional Investor, Strategy and Business, and Worth. And I've co-written and edited a couple of books. The most recent was Merge Ahead, Mastering the 5 Enduring Trends of Artful M&A. More importantly than my background, however, are those of our two excellent speakers today, and I would like to introduce them both to you now. The first is Joost Hopperman, Vice President, Principal Analyst, serving application development and delivery professionals at Forrester. Joost serves application development and delivery professionals, particularly in financial services. As an analyst, he is an expert on a number of architecture and technology topics in global banking, such as off-the-shelf banking platforms, including core banking, mobile banking, online banking, and omni-channel banking, payment and financial risk management solutions, banking architecture, banking platform transformation, architecture, and strategy. He also led research into the business and technology aspects of banking in the future. During his more than 10 years with Forrester, Joost has provided strategic analysis and pragmatic advice to executives, operational level managers, and architects on topics such as strategy plans, architecture development, governance, and large-scale software development, integration, and deployment. As a conference speaker and quoted expert, Joost has addressed numerous topics such as industry trends, implementation, and the operation and migration of applications and systems, as well as the economic and strategic issues around these technologies. We are very, very happy to have Joost with us today. And joining Joost is Nitin Thukral, Digital Solutions for Financial Services at Axway. Nitin heads the Digital Solutions for Financial Services team at Axway. He is passionate about leveraging innovative technology to address digital transformation initiatives in the banking, payments, and insurance industries. With 18 years of software industry experience, Nitin has been instrumental in leading the expansion of high-tech startups in emerging market segments, resulting in notable acquisitions by CA Technologies of Layer 7, IBM of Data Power, and RSA Security of Securant. Prior to his current role at Axway, Nitin held a wide range of leadership positions at industry-leading companies, specializing in cloud security, API management, SOA governance, and enterprise integration middleware. Leveraging a solutions-centric approach and expertise for key industry vertical segments, he has helped numerous organizations scale their revenue potentials by delivering value and ensuring customer satisfaction. Nitin attended the Applied Sciences and Computer Engineering programs at University of Toronto and is an avid world traveler. So we are very pleased also to have Nitin with us today. Just before we jump into the real meat of the discussion, I wanted to reiterate just two things that Greg mentioned at the top of the hour. First, we do have time at the end, usually about 10 minutes for Q&A. You don't have to wait until the end to put in your question. As the spirit moves you, as they occur to you, you can put your question into the panel, and we'll make every effort to get to it in the time we've got. If for some reason we run out of time, we don't get to your question, we will follow up afterward. So your voice will be heard. Please ask anything you'd like. And we also have two polls today. I always encourage 100% participation whenever possible. We do share the results with everyone with us today. It's kind of a nice kind of level setting for everyone to see where everyone else stands on this issue that we've come to talk about today. So if you can check the appropriate box for your institution, that would be great. And I think that brings me to the end of my little spiel here. I will be back later to run those polls I just mentioned. But in the meantime, let me turn things over to Joost. Joost, you have the floor.
Thank you very much indeed. And to be honest, after this introduction, I'm not sure whether I'm definitely the person you described. But in any case, let's go right to the topic. And I'm very pleased that Axway invited me to talk about competitiveness of banks how banks will use digital capabilities to remain competitive. And I think we all agree that banks have to change how they do business, how they serve their customers, how they deliver these capabilities, their business capabilities, to their customers and to their employees. And in the meantime, why after a time where executives, at least some selected executives, were relatively reluctant to accept that change is necessary as long as they could keep the revenue curve halfway stable with some minor measures, I think we can now agree, at least the vast majority of people working inside and outside of the banking industry, that there is time for change in banking. And the question is simply, what does it mean? How many companies have accepted this kind of need for change, this what Forrester likes to call transformation imperative? And our survey data tells us that the vast majority of financial services firms is either already working on changing the way how they work or plan to do so by the end of 2016, the latest. At least they plan to start doing so. And the number is probably as large as never before. In none of our previous surveys, we had 81% of financial services firms saying, yes, we need to change. So the question is certainly, what are the drivers for this need to change at a more detailed level? What are the initial change areas, and are there any obstacles? And are there any preferred business technology areas that banks intend to focus on? So let's start with the first question I raised. Let's have a look at the top 9 business drivers for change in financial services. And based on some survey data from Forrester's Financial Services Architecture Survey, we can definitely say that one of the key topics, one of the 2 most important topics, is to provide better customer service and experience. This may not come as a surprise, but interestingly, this is something where the North American continent, and this is North American data here, is definitely more focused on than the global audience. Globally, regulatory requirements are more important. And then the second most important topic is about channels, all kind of touch points, whether it's a mobile channel, whether it's omni-channel, or whether it's about social channels. So I guess it's fair to say that a lot of change will occur in the area of channels of customer experience and customer service. But we need to keep in mind that customer service does not only mean fancy user interfaces, it's certainly also about lean processes and certainly about solutions that can deliver information and feedback about initiated transactions at more or less real time, on a more or less real-time basis. With that, let's have a look at where will change occur. And let's have a look at the top 12 initial focal areas for change. And here we definitely identified a pretty clear picture. There are quite a couple of primary areas where financial services firms see the need for change, where they will likely start to change first. It's definitely about analytics, business intelligence, and big data. I guess no surprise. It's about core banking, aligned with the need to deliver great customer service. But it's also about mobile banking, omni-channel banking. It's again about the touch points and channels. But most importantly, and this is some kind of renaissance here, companies accept again the fact that they need a great architecture, some kind of flexible application infrastructure as a basis for the transformation of the application landscape. And I do not want to run through all of these topics here, but I guess it's very important to say that the branch is one of the top 12 topics again. This may come as a surprise to some of you, but I believe from a customer perspective, it's very important to have at least the same capabilities in the branch the customers have in the mobile channel, in the internet channel, at least if a bank wants to reposition its branch network as some kind of center for advisory and sales capabilities, as an area where customers can definitely experience great service and also a great relationship with their branch employees. With that, let's have a look at the key obstacles. And interestingly, without running into any details here, it is pretty clear that when we ask financial services firms, none of these top 5 obstacles is an obstacle that has anything to do with, say, any kind of technology capability, with any kind of specific business application. It's something that is related to the business itself. It's related to corporate culture. It's certainly related to what some of the people told us, the people we surveyed told us, was the lack of vision, the lack of forward thinking and the like, but it's certainly not about any kind of large technology risk. Don't get me wrong here. Technology risk is certainly something that is very important, but it's more a driver for change than an obstacle. The next very important topic is certainly where can we get the largest amount of differentiation. And in our survey, we also asked about key areas for investment and key areas of innovation, at least areas where banks expect a lot of innovation. And the next figure here shows us how these topics relate to each other. And if we look at the upper right corner, we can clearly see that there's a single topic that comes in as a topic that will enjoy the largest investments and where banks also expect the highest amount of innovation. It's about what we call broader customer experience. This means it's about products and services, it's about the normal customer experience as in user interfaces, corporate culture, but it's also about channels and touch points. It's certainly about social channels and the like. And then it's no surprise, business insight, analytics, big data. And what is a little bit worrisome is probably that digital banking is not in the upper right area. It's pretty close to the center of the graph. So consequently, banks do not see that a huge amount of focus when it comes to industrialization of business processes, to real-time banking, etc. And I think this is certainly something where I hope banks will readjust their priorities in the future. With that, we can also identify a couple of key technologies, a couple of key business technologies, technologies that focus more on customer service than on bank internal aspects, that we consider to be highly relevant. I think someone is likely playing around with the slides here, so let me readjust this. So, and we have basically identified a couple of criteria, a couple of buckets that show us key areas of financial services of applications. And we say it's about broader customer experience. It's certainly about business insight, but it's also about digital business. So consequently, we are saying it's certainly about omni-channel banking capabilities. It's about capabilities to build great user interfaces, maybe even automatic optimization of user interfaces based on analytics of customer interactions. It's certainly about contract management to create some kind of umbrella around all products and services that a certain customer has with a given bank. Certainly it's about customer information. It's definitely about real-time pricing engines and social media. No surprise, it's again about big data, but more importantly maybe, at least in the context of broader customer experience, is a supporting layer of digital business, where we clearly see the need for core banking, for payments that can deliver capabilities in real time, at least close to real time, and the same requirements are clearly here for seamless onboarding and so on. So it's definitely a huge agenda that we can see here that defines where banks have at least to build modern solutions or have modern solutions in place. Will this be all? Likely not, because this is more some kind of short to medium term agenda, something for the next couple of years. But there's also a longer term perspective. And some of you may know that Forrester is doing regularly some research into the future of banking. And we do not use any kind of crystal ball to predict the future. No, we talk to banking leaders on the business and technology side in North America, South America, Europe, the Middle East, South Africa, Asia Pacific, and Australia, to get their take on the picture on how banking of the future will look like. And it's certainly not about any kind of lofty picture. It's in some cases a pretty realistic picture. And this picture clearly is clearly based on a number of key drivers that will shape the future of banking. And one of them is definitely, I mentioned this a couple of times, data, business insight, analytics, definitely predictive analytics, so that a bank has the best possible picture, the best possible view on the state of the business, the current risk situation, about customer interactions, and certainly about how they can offer customers the best product at the best point in time. Also about regulation, no surprise, and many see a regulation as a huge obstacle. I guess there is no discussion on that. But at the same time, it's also about considering regulation as an opportunity to, for example, leverage the investments to create a data foundation, for example, for big data, or to use the need to open the banking applications to the outside world via APIs, something that is happening, starting to happen in Europe these days, to create new business models, to create new partnerships and the like. And then it's definitely about security. And I do not want to drill down into that topic too much, but it's definitely about designing applications with having security in mind as opposed to bold security on top of an application so that it's not kind of an integral part of the overall application landscape. And then it's clearly about the market of one, to be able to define products and services down to the individual customer without creating one product for the customer, but by configuring and bundling products and services even beyond the boundaries of a given bank. And this will likely happen, maybe not necessarily at once for all customers, but definitely for the more interesting customers of a bank. And certainly it's about innovation. As you can easily imagine, it's difficult to speak about innovation in a relatively short time period, particularly because innovation is certainly something that is not very stable. I recently talked to the Chief Innovation Officer of a medium-sized regional bank. He told me, yes, I have a couple of very innovative ideas, but if I would tell you, they wouldn't be innovative anymore, right? So let's skip to the next topic here. One of the topics that is probably even more important, not in the context of banking of the future, but in the context of a flexible architecture. This is ubiquitous banking. Banking at any point in time from anywhere. It's definitely some of the most mature topics in the banking industry, but at the same point in time, also one of the topics that likely will see the most improvement, because it's not sufficient to go for a mobile solution. It's certainly something that will continuously be improved, something that will see enhancements over time, for example, multimodal omnichannel capabilities. At the same time, it's clearly about new business models. It could be that banks are going for marketplaces, areas where they offer their banking products and third-party banking products and services, where they offer their clients and customers the ability to comment on products and to buy their and third-party products. This will enable them, very similar to a comparison site in the web, to sell these third-party products and get at least some share of the revenue stream as opposed to nothing. At the same time, to go for such a kind of ability, they will need new front and new omnichannel capabilities. At the same time, if they want their products to be part of such a kind of marketplace, they will certainly need to open their applications via defined and exposed APIs. And talking about APIs, some banks are already considering to use APIs to, again, create additional revenue stream. One bank that I have in mind, Fidor Bank, has already opened its solutions And even a retail customer can use their APIs against a monthly fee to access his or her own accounts via defined applications. So APIs will definitely become a very central aspect of banking, and I guess we need to consider APIs as something that are already part of the banking business as opposed to something that will come in 5 or 10 years. With that, let's move to the next topic, which is industrialization. And I already talked about the need for real-time capabilities, about lean processes, but this is only just one aspect of industrialization. The second aspect is the fragmentation of the value chain, where banks will use utilities to cover non-differentiating business capabilities, or where they will use their own services, either directly or maybe via some subsidiary, to allow other banks to use these capabilities, maybe the core competency of the first bank, in a most effective way. So industrialization certainly includes a fragmentation of the value chain, an area where banks will partner, will collaborate, and compete with many other financial services firms and non-financial services firms at the same point in time. The next topic is certainly customer experience. And we clearly need to consider customer experience as more than a user interface. It's about corporate culture. It's about the corporate mindset. But at the same point in time, it's very important to also focus on customer experience from the user interface perspective. I already talked about automatic optimization, but it's more. We certainly need to consider that solutions, mobile solutions, omni-channel solutions that get more and more secure should not become inconvenient, because inconvenient security is certainly something that works directly against customer experience. So it's definitely about a huge need for customer experience that gets supported by all kind of most modern technologies, including multimodal omnichannel, maybe including video banking as a first step, and many other tools. And this is certainly some differentiating factor for the next 10 or 15 years, but at the same time, because this is some kind of foreseeable time period, many banks are already asking the question, what will come next as soon as customer experience has become a commodity in 10, 15, or 20 years? So we talked about these 9 major drivers that will define business change, that will define how banking of the future will look like. Some at a more, some at a less detailed level. The key question is certainly now, how will any kind of future state architecture look like? And there are plenty of requirements that were already there when it came to previous target state architecture that Forrester has defined, Banking Platform 2.0 in 2008, and the first banking platform even earlier. So some of these requirements go back to the first banking platform. All of these dark blue requirements have been there with Banking Platform 2.0. Maybe under a different name, but they were certainly there, whether it was about flexible business processes that could be parameterized, whether it's about the ease of connectivity to other solutions, whether it's about the need to have a single view on the customer. But there are new capabilities. And these certainly include customer experience. And don't get me wrong, customer experience was a clear element of Banking Platform 2.0, but it was not a clearly expressed part of the target state architecture. Now it needs to be one. Second topic is about functionality sharing. The need of a banking platform architecture to allow to be designed for providing functionality across business divisions, to avoid that 2 departments have 2 different applications with 70% same functionality, redundant functionality. Becomes clearly about marketplaces. We talked about that a few seconds ago. And it's definitely about transformation support. What does it mean? Even Banking Platform 1 and Banking Platform 2.0 were already built to cope with transformation. However, at that time, it was more about a single transformation, something that a transformation team planned once and then executed. Today, we believe that banks need to be prepared to have an architecture that supports continuous transformation, because change will not stop. Change will be one of the few constants of the business, and consequently, architectures need to support continuous change. And I guess this is pretty much in line with something one of your colleagues who is responsible for a large transformation project told me. He said, without radical change, the legacy strangle will hold just differently. To be fair, he meant not only architecture, he meant technology, architecture, and the methodology, how to deliver new solutions, how to execute transformation. But I guess the statement is nevertheless absolutely true in this context. So let's have a look at Banking Platform 3.0. Let's start with one key element. It's about the cloud, whether it's about the private cloud, on-premise, a hybrid cloud, or all the various flavors of close to software as a service solution that are out there, whether they are existing today, whether they emerge in the market. It's definitely about clear cloud support. The second piece is about built-in security. The solution needs to be designed to be secure. It is definitely about the layer that focuses on business processes and customer engagements and customer experience. It's definitely about content optimization, and it's certainly about personalization via analytics, including automatic optimization of the user interface. The next layer is the aggregation layer that will allow us to compose capabilities from the underlying solutions so that they fit into the business processes, so that the customer experience can get optimized. And certainly, this is the right place to expose banking capabilities via APIs. At the same time, these two layers more or less represent omnichannel banking. But omnichannel banking will certainly expand over time, because omnichannel banking needs to embrace those solutions that allow to deliver in real time or close to real time. So consequently, the next layer is the execute layer, a layer that allows a customer to get direct feedback on whatever the customer has initiated. Direct informational feedback, direct confirmation of transactions. Then it's clearly about store and manage to keep information secure. And definitely, we will need APIs so that the entire architecture will remain, first of all, loosely coupled, and second, coherent. Coherent in a way that capabilities that belong together will be in one functional module, and capabilities that tend to change with each other at the same time are in the same module. But this won't be all. We also need a layer being responsible for data, for information, so we will need transactional data stores and long-term data stores, and again, they will need to expose their capabilities via APIs. We'll come back to these two topics in a few seconds. In addition, we will need sensors, meaning we need, for example, the capability to connect to iBeacons, to interact with customers in the branch in the best possible way, to know where they are, to know what kind of information in the branch is most interesting for them, and obviously to use this information to best serve the customers. And then it will definitely be about a lot of business tools that allows us to manipulate metadata across a solution, to define organizational change, authorization hierarchies, and products and services, for example. But at the same time, it's definitely also about a strong capability for business intelligence, for analytics and big data, indicated by the small BI over there. And this business intelligence capability can certainly work with both transactional data stores and long-term data stores. But what is the difference here? So we will definitely start, for example, a fund transfer within the blue layer, within the business process and customer experience layer. It will get executed in the execute layer, and maybe accounting and clearing will take place in the store and manage layer. So it's really about a design that is focused on the customer, about immediate response to the customer. Information will be stored in the transactional data store, just to be moved over to the long-term data store after some time. And what does it mean? This means, first of all, that we have a sound foundation for all types of analytics, all the various flavors of analytics I mentioned over the last 20 minutes. And we definitely can focus on a lean transactional data store. one global bank, one tier 1 U.S. bank is using a very similar approach to consolidate its risk information across multiple international entities. The transactional data store is probably only, say, 6 weeks large, just to use a measure. Other banks may use 6 months. And after that, they transfer every piece of information into the long-term data store, thus offering a pretty well-established foundation for global risk management. I believe if we follow that line of thought, we definitely have a pretty good grasp of the future of banking. I believe this is nothing that we can do immediately. Banking Platform 2.0 needed 5 to 7 years, this is what we said at the time, to become real. Now, 6 years later, we are probably at 70 to 85%, depending on the technology, depending on the bank, depending on the banking platform vendor. So consequently, Banking Platform 3.0 is also a couple of years out, but I guess it's a pretty fair target state to support continuous change. And if we walk in that direction, I believe we'll definitely arrive at banking that is easy like Apple, fast like Google, and automated like Amazon. And with that, I would like to finish my 25 minutes and stop talking here. Thank you very much.
Thanks very much, Joost. And that was great, and it does bring us to the first of the promised polls of the day. And what I will do here is move. Here we go. Here's the poll. And what I'll do is I'll go ahead and I'll read the question, I'll read the answers, and then by the end of that, hopefully everyone will have made their selection, and then I will share the results with everyone. So where is the state of ubiquitous banking in your bank today? A couple different options here, 5 different options. We use channel islands, but no solution for all customer touch points. We focus entirely on the mobile touch point, or we use a mobile-first solution and will expand it to embrace further touch points later on. Or we have a multi-channel solution in place, but it does not provide cross-channel capabilities. And finally, the other final option is we have an omni-channel solution that supports ubiquitous banking independent of the touch point, including the bank branch. So once again,
Mike,
yeah.
Oh, I was just going to interrupt for a second. Since it is a heavy content poll, you may want to expand your viewing area so you can see the submit button at the bottom of the poll. Just be sure to click submit and your results will be recorded. Thanks. Back to you, Mike.
Thanks very much, Greg. It's always great to have the extra direction when we need it, so thank you for stepping in. So everyone, just again, the question is, where is the state of ubiquitous banking in your bank today? So I'll just give everyone another moment or two to make their selection, and then we will be off to the races with the things will be turned over to Nitin actually in just a moment. Okay, so I'm going to go ahead and share the results. And so 42%, by far the largest group of you, have said we have a multi-channel solution in place, but it does not provide cross-channel capabilities. 42% said that, and then 24% said we use channel islands, but no solution for all customer touch points. So thank you so much for participating in that. And now we were going to move on to Nitin's part of the program. So please, Nitin, take it away.
Thank you. And good day, everyone. This is Nitin Tukwal with the Axway team. I specialize in digital solutions for financial services at Axway, based out of Toronto. I'll start with just a quick introduction on Axway. A lot of you may be familiar with Axway, but we help enterprises secure and govern their ever-increasing flows of data. This is data that needs to flow through more systems, increasing amount of accessibility, and with the requirements of having to arrive on time, intact, error-free at more endpoints. We serve over 11,000 organizations globally. We have about 2,000 employees, a few dozen patents, and we are publicly traded. And welcome to look us up on the Euronext exchange. To recap some of the technology trends that we're observing in the digital banking industry. We're seeing increased digital interactions that to meet expectations of suppliers, customers, and partners. We're also seeing new services that are being exposed, and in a lot of cases, creating new revenue streams. A good example of this is Axway customer Dun & Bradstreet that I'm going to use as a case study towards the end of this presentation. There's also a need for a bimodal application and integration strategy. One of the best way the best example I can think of to expand on that is a conversation I had with one of your peers that referred to this as having to do a 100-meter sprint while running a full marathon. So you can think of the bimodal nature of IT, where you have to preserve older legacy systems while at the same time reinvent yourselves to meet new and emerging trends. Always a need to reduce risk. That's the ability to again govern and manage volumes and data flows, and reduce operational risk and increase, of course, operational intelligence at the same time. We're seeing a definite trend where interactions are moving towards enhanced collaboration, more real-time visibility. You can think of tracking packages, for example, via FedEx, UPS, and other courier services. We're seeing the same need now of that level of real-time visibility in banking and financial services. I've provided a snapshot of just how the retail banking landscape is being disrupted, and you can see a lot of probably familiar logos and name brands there that you recognize. Some of the more common ones being PayPal and Starbucks would be a classic example where they actually, in fact, don't have a banking license, yet they process billions of dollars of transactions via their mobile payment application annually. And again, that's an example of a traditional service that a bank or a payment provider would otherwise be providing, and certainly that's a new revenue stream for Starbucks in that example. One common thread across this digital revolution is the need for more integration that has to happen outside of the enterprise. As everything now becomes more complex, data is now harder to secure, service level agreements are harder to meet and measure, and consequently regulatory compliance is harder to achieve and maintain. So what we do at Axway is we provide solutions for what we call the digital foundation, as well as to digitally enable enterprises. The foundation really helps with data flow management, which includes managed file transfer, management of B2B partners, for example. Also helps with visibility and analytics. And take that a step further, and once your foundation is secure, you can now enable your organization digitally by helping provide a common set of access services via APIs. And for that, a lot of enterprises leverage the Axway API platform that helps secure connectivity and manage integrations with different constituents. Those constituents can range from consumers, employees, certainly other third parties in B2B contexts, and just generally speaking, things. I'm sure everyone's heard of the moniker of Internet of Things or Internet of Everything. And again, that's certainly true in the financial services industry as well, where sensors are coming into play, and there's a lot of use cases around telematics, as an example. Actually, we propose a digital banking framework, again, something that clients can leverage to not only reduce operational costs, but also grow revenue streams. A good example of this framework is the governance of unified access to backend systems and application middleware, with the traditional silos of data stores and homegrown applications included. Similarly, the framework can help secure business interactions with partner communities. Also allows for monetization of products, new services, and in a lot of cases, data as well. So data now becomes a new currency that can be monetized with the right controls around it. We re-emphasize what Joost was talking about previously around the need for omni-channel capabilities. Again, that's something that our digital platform provides, and the ability to start a transaction, for example, via one channel, say mobile, and continue that same transaction without really losing state via another channel. So, for example, you could start a loan application or a mortgage application via a tablet, and then you should be able to continue that on either your PC or desktop, or else in a bank branch without having to redo that process from start. These are a few examples of financial services organizations that Axway does partner with, and they each utilize Axway's technology solutions for B2B and partner integration, as well as mobile and cloud enablement. A good example of an Axway client that is benefiting from the use of APIs is Dun & Bradstreet. They're certainly a company that need introduction to a lot of you. They're a global provider of commercial information, maintain a database of over 225 million business records. And to grow their revenues and enable cross-sell opportunities, they introduced a new product offering they call D&B Direct. Effectively, D&B Direct is a data-as-a-service approach that allows Dun & Bradstreet to embed their data into third-party applications via the use of APIs. This is data that Dun & Bradstreet has maintained, owned, and offered as paid services to clients for dozens of years. What they're now doing is leveraging a common API platform provided by Axway to meter customer usage and secure access to those back-end data stores as a service. So they're offering this as a monthly or an annual subscription service to their clients. And in the first year alone, by their estimates, D&B added $17 million in a new revenue stream while experiencing an annual growth rate of 70%. At Axway, we'd love to hear about your organization's digital journey. Please engage with us via Twitter. There's a hashtag there for you to use, and certainly other social media channels as well. There's also several other client case studies that are available on axway.com for your benefit. With that, I'll move to the second poll.
Great, thanks, Nitin. And yes, as we hinted at the very start, we've got our second poll here, and why don't we just, same drill as before. I will read out the question and then the answers, and then we should probably be about set. So what is the most important driver for digitization in your organization? Is it to reduce disintermediation risk, reduce cost of operations, improve revenue, improve market share, or improve the customer experience? And again, this is, while many of these might be on your list, we want to look at what is the most important driver for digitization in your organization. Let me just give everyone another moment or two and put in their answer, and then I will share with everyone. And then we'll have just about exactly 10 minutes for our Q&A. So if you've got any questions out there that you've been thinking about, please put them in now, and we'll make every effort to get to them. All right, I'm going to go ahead and share now. And far and away, improving customer experience, 51.2% said that, and then everything else was pretty reduced the cost of operations, improve revenue, improve market share, all 14, 16%. Disintermediation risk was definitely far and away the least important driver, only 2.3%. So thank you very much for participating and sharing those with us and with the wider audience. So thanks again. And so we've got, as I said, about 10 minutes for Q&A, and I think we should just sort of jump right into it and make the most of it. All right, and what I'll do here, Joost, and I'm just going to read out the question, and please just, both of you, either one or both of you sort of step in and take it on the fly. How can banks cope with new peer-to-peer payment apps such as Venmo? What are you seeing in the field?
Okay, maybe I can give it a try first, as Joost.
Great, thank you.
I think there are basically multiple options that I see in the field. To offer you a few examples, one bank in Singapore, Malaysia, for example, is using a mobile app that it distributes to its customers and non-customers so that they can basically exchange the necessary information to ease the process of money transfer. So it's really some kind of add-on to a traditional money transfer from account to account. And it's not only an additional capability that helps their customers, that helps third-party customers to do some kind of, say, close to peer-to-peer transfer because there's an intermediary, obviously, but it also helps that bank to bring their mobile apps to non-customers. So they have some kind of, they can reach out to non-customers and send them information, etc., etc. Other examples are certainly about groups of banks offering these capabilities within their group. When I say group, I do not mean any kind of legally, some kind of global group. It's more about, it's more about some group by agreement that says we are now offering these peer-to-peer capabilities between our customers. And obviously, in many geographies, there are emerging or existing capabilities, whether they are called faster payments, immediate payments, and or instantaneous payments, whatever, or instant payments. There are multiple names for that depending on the country and the geography. And in many countries, these new close to real-time payment mechanisms will definitely include, but will not be limited to peer-to-peer payment.
Excellent. Thank you, Joost. Oh, sorry. Did I cut someone off?
No, not at all. I simply wanted to say I could probably talk about that for quite some time, but I will stop here.
All right, good. We've got another couple questions here, and I'll toss out to both of you. Okay, here. What do FIs see as cross-channel solutions? Do you have examples?
So should I again give it a try?
Please do.
Okay. So I think if you look at the clear definition, it's definitely about a capability that goes simply beyond a platform that supports multiple channels at the same point in time. I think our polling questions showed that many banks today may have a single platform, a single infrastructure that allows them to serve multiple channels, whether it's mobile or internet or whatever. But they also, the poll questions also said they do not yet offer cross-channel. This means that the channels are isolated, so a multi-channel solution or a non-cross-channel solution is simply a more effective way to run channel islands. And when it comes to cross-channel, we have a consistent view on the customer, on the transactions, on the information processes across the channels. The customer can, in an ideal world, probably work on a certain topic, work with a certain transaction, independent of the touch point. And if we look beyond that, if we look beyond cross-channel, we would even arrive at a level where the entire let's say, omni-channel environment would be more characterized by what I like to call an omni-channel business process, something that is very much aligned with the notion of Banking Platform 3.0. So it's really about closer to a no-channel solution, because a business process isolates the customer or the bank employee from all individual channels. It's more some kind of single touch point.
Understood. Wonderful. Thank you. All right. Let's see here. Next question, also maybe I direct this to you, Joost. How are banks addressing the bimodal application and integration strategy challenge?
Okay. So I'm not entirely sure what is meant with bimodal. I assume it's probably more on the two speeds of application within the application landscape, as in the very fast speed when it comes to customer-facing capabilities, and in the lower speed of change when it comes to, say, core banking or payments or you name it. I think what I'm seeing here is certainly that some banks are ignoring the need for two-speed, and this certainly ends up in some kind of less than optimal environment, where they have great solutions offering great customer experience to a limited degree, because they cannot live up to the promises, because the back-end solutions, to bring it to the point, cannot deliver sufficiently fast. So the more advanced banks are certainly trying to work with isolation layers, decoupling the overall application landscape. They try to transform. They try to make their core banking solutions, their payment solutions, etc., their lending solutions more real-time capable, just to offer one important ingredient. And in between are banks that are trying to simulate real-time by some kind of layer in between that is trying to basically replicate certain transactional capabilities by offering a customer some, for example, information, hey, the payment transaction, the money transfer worked out nicely, although it has not yet been done. So it's really some kind of simulation to achieve better customer experience. At the same point in time, I've also seen banks using this approach running into some issues, at least with internal auditing, because they were not able to keep this simulation layer, this layer that I like to call shadow accounting, and the true back-end applications 100% in sync. Obviously, again, this is a topic that is probably way too broad and too deep to respond to that in 60 seconds, but it's certainly a very important area here.
Great, thank you. Okay, here we're getting close to the top of the hour. I think we have time for the question or two. Do you have any tips for connecting APIs to improving the customer experience for an executive who may not have as much technical knowledge?
I'm not sure that I understand the question. Connecting APIs for an executive. So it's probably about explaining that to this topic to an executive. Okay. I think it's really about opening a window into the banking applications. And this window can be used by retail customers, by corporate customers, by all types of business partners, whether they are other banks, other financial services firms, non-banks, as well as software companies, to create new business models, to create new partnerships. And if banks are sufficiently fast and are sufficiently and offer sufficiently well-defined exposed APIs, this can certainly be a huge opportunity for banks in the future.
Excellent, excellent. Thank you, Joost. You've been I've been coming at you with a lot of questions here, so thank you so much. All right, one more question before we sign off. Is the unbundling of banking an opportunity or a threat to traditional banks? How can banking APIs help?
Okay, I will give it a try again. I guess this is very closely related to what I just explained. I think the unbundling of banking, the fragmentation of the value chain, is neither an opportunity nor a threat. It's simply some kind of development that will happen. Today, banks are very similar to the automotive industry quite some decades ago. They do close to everything end to end. The question is this effective? Is this something that is serving the best needs of their customers? Can they create the best customer experience? And I believe, similar to the automotive industry, we will see this kind of unbundling, the fragmentation of the value chain as a natural process. It's not an opportunity nor a threat, unless you really say we don't do that. So from my perspective, also considering what I said earlier on with regard to APIs, it's probably, if you do it right, it's probably more an opportunity. But at the same point, how can APIs help? Obviously, APIs are a tool to be sufficiently flexible in this new world of unbundling of banking.
Wonderful, wonderful, thanks. I think that's an excellent note on which to close our program today. We do like to bring these things in on time, respecting everyone's busy schedules. Thank you, Joost, and thank you, Nitin, for a great hour of content and discussion. We've got wonderful information here, and also lots of great questions from the audience. Thank you for those questions, and thank you for participating in the polls. It is great to have you with us. We would not want to do this program without you, so thank you for being here. And please, everyone that's with us today, look out for an email from us in the next 24 to 48 hours, and we'll be sending you a follow-up email that'll have a link to the recording of this program so that you can listen to it again at your leisure in the future if you'd like to. And we encourage you to do that. And let's see, I think with that, I will wrap things up. Wish everyone a wonderful rest of the day, and I hope you will join us again here very soon. Thanks so much.